Step number 2 in the foolproof financial formula: identify your budget. Now, this is the one section that everyone gets stuck on. Pam, how do I invest in real estate if I don't have any money? Well, this is where we get creative, right? There's so many different opportunities on how you can do this, right? But you have to make sure that you have your strategy laid out. It's very, very important. And there could be some different ways that I'm about to mention that you don't really think of to use in real estate investing, but guess what? This section is all about leverage. How do you leverage so that way you can have an awesome budget to go out there and purchase something profitable and amazing? So that's what we're gonna get into. Of course, one of the things you can look at, how much cash do you have in the bank? Most of us don't keep like $250,000, $500,000, $1 million in the bank just sitting there, right? Even most real estate investors that I know, like they would never have that much liquidity sitting in their bank account. They always want their money to move and work for them. Why would you let it sit in an account, make less than 2%? Like think about that. If you leave cash in the bank, you are literally leaving money on the table. For example, if you had $100,000 sitting in the bank right now, making not even 2%, and we're at inflation, which is like 8-9%, you're literally losing 7% on your money. You need to put your cash into things that will constantly move with the market. Most people don't have cash sitting in the bank, and if you do, then that's awesome, super great. Like let's work that and let's put that to work. But most people tend to leverage what they have, right? For example, properties, any properties that you own, whether it's your primary home, secondary home, like commercial properties, investments, all of that stuff. If those properties have equity in them, guess what? You can leverage them. So say you own a property that's worth $100,000 and you only owe, say, $50,000. You have $30,000 of room to play with because any bank will give you an equity line for up to 80%, which is amazing. And like, it's just sitting there in your property. Now those numbers are very low. It's not realistic. Property values are more of like 1 million and you owe 500,000, you can play with the extra 300, right? So for numbers sake, I was doing 100 to show you kind of what that looks like, because banks will only go 80% loan to value ratio due to market conditions. Equity lines are super important. Bridge loans. I mean, there's all types of things that real estate investors use. You can use this for any commercial property. You can use it for residential property, your primary residence. You can do a HELOC, home equity line of credit, bridge loans for these other commercial or secondary assets, things like that. So you can leverage your property to buy more property. I mean, I've gotten to the point that a lot of my real estate deals, I don't even put money down when I purchase something new because they just take the equity from my other properties and just cross-collateralize them or work it that way, and it works out perfect. So much opportunity you can play with when it comes to equity. Then there's 401ks, right? And life insurance policies. Most of them, they allow you to take the money out while the money is still compounding inside the life insurance policy as you continue to pay it. So it's pretty amazing that you can take that money out, use it for what you want, pay it back without a problem, and your money will still compound while it's in the policy. So anyway, you can take that out and play with it. There's business loans you could get. I mean, there's a whole bunch of loans that you could get. And if you're a first-time investor and you're looking to purchase something for yourself, even if it's a simple like 2-family, right? You yourself could go in and get a 203K loan. So if it's a property that needs a little bit of work that you're thinking about moving into yourself, you could get a loan from the bank for the construction of that. So they would give you the construction loan to fix the property, and then you could refinance after. Now, that's something thinking about an investor who's going to invest in their own stuff, right? But then there's other options where you can bring in equity partners. You could totally bring in investors, whether it's family, friends, professional investors, or anything, and everyone can pool money together and you can purchase properties. There's all different ways to lay out the deal, but you can bring in family, friends, investors, whoever. And honestly, I mean, some of the biggest real estate investment trusts, if you've heard of REITs, that's what they do. They basically pool money together and buy all of these assets, and every single REIT has their own specialty of what they purchase, right? But those are like massive multi-million, sometimes even billion-dollar companies. But you could do that on a small scale if you don't have any money to start. And another thing that you could do, if you don't have those types of relationships and you don't have the real estate investing experience, what you could do is actually partner with somebody or joint venture with another investor on their properties where you're basically putting in the time in order to get the experience and a certain profit margin if you don't have the money, right? There's people that will put up cash and then let you do the work, and then you split at the end of the day, right? But then you capture that experience, you get some money in your pocket, and you can roll that into another deal. So there's all types of ways to really get creative, but you've got to figure out how are you going to fund this deal, right? So before you go out and start looking at a million different things, you figure out step one, which is identifying where you're going to play, where's your sandbox. And now it's step two. You're here deciding what your budget's going to be. So that way you can dictate, how am I going to fund this deal? So that way you know what to look for. And that's going to bring me to point number 3, which is identifying your asset class, because that also is determined by budget, right? So these are all the creative ways that you could fund deals and create an awesome budget to find the best and most profitable deals. But this is step number 2.